Hey guys, it's Vic from Grasping the Market and welcome to our market briefing. The week closed right in the middle of the last 2 weeks range. You can see that the monthly remains pretty much centered around the earlier year 4-month balancing range, which we failed to go out in July. And in the weekly, you've seen that we've trading. Earlier in the week we traded above the previous week's high, and late in the week on Thursday we approached the low and we bounced back. And we closed right in the middle. So the market is an intermediate term balancing range. It's quite a wide range between 28.20 and 29.40 area. Now, if you look at the daily, you have more. You have the disgregation of that rotation back and forth. You see the initial move down with the gap, then the rejection, then the gap closure, big gap closure, then another attempt down. Then we have this day with the massive upside that was reversed the following day. And then on Thursday, I think things got pretty interesting at the end of the week, because on Thursday we did a clear attempt to reach that high, which we know has a very questionable excess. And there was a strong rejection, leaving a daily excess there and a gap up on Friday. Now, the caution thing to the downside, as we have mentioned deep in the profile, in the market profile, we know that this daily excess here has double TPOs and has no excess to the downside. And the low is very close to these two previous lows. So there's some vulnerability there, but that will that will start increasing odds if we start heading towards it. For the time being, on Thursday we had excess, which was confirmed on Friday, but a gap up which held through the day, and we closed at the highs. So the last thing I would like to mention on this chart is, in my experience, I would also like people that follow us and see this briefing and see these videos to comment on this. In my experience, when you have a rotation through a range, what I've noticed is that this bar is a very important bar. And by this bar, I mean the bar when you rotate from one side to the other through the middle. I've seen that many times, or very often, when you go through the middle with no give back. And by give back, I mean that you start the move and you don't start going back below its half back, but you just push and you remain in the top, let's say 20% of that bar. That's exactly what you want to see if the rotation is strong. So the move we saw on Friday, which opened with a gap, immediately drove outside and stayed the whole session at the top, is exactly the type of things that in very often is followed through with continuation to the upside. Having said that, we need to pay attention, because as we will see in a few seconds on the market profile, all things are not as rosy as they seem. If we look at the market profile, we have a P-shaped profile. P-shaped profile normally is in an indication of short covering, meaning that a lot of people, for some reason, could be fundamental, could be technical, could be whatever you want, close short positions very quickly, and that created the initial momentum to the upside. But after that, there are no new buyers, and then the price gets stuck in an area. This is exactly what I think happened on Friday, because we had some news from the German finance ministry saying that they will intervene if the recession hits, and that supports equities, because people think, well, if something goes happening, we have the backup of the government. They will help supporting the equities, and that created the move. But the important thing there, one detail is that we left a one tick distribution. That's not good. That's not very strong structure. And the other thing is that you had a lot of attempts to go and to take that initial morning high. D only could make 3-4 ticks, and then H failed, I failed, and fail, and at the end you close inside the morning range, let's say. Uh, so I would like to say that it's a strong move, but I would be cautious because of this. Now, if you put this in the context of the daily chart that I just mentioned, with the push through the middle and no give back, now immediately you know what you're looking for the start of the week. For the start of the week, you want to see if there is continuation to this bar or not. Uh, Immediate continuation would see, obviously, acceptance above this range. And the key level to look for is we have the halfback of that 13th of August, which was the day with a strong upside. If you pass through, well, if you get acceptance here, that's good because basically you are denoting change from Friday, and whatever you couldn't do on Friday, if you get acceptance here, you're doing it. So that's continuation. But my focus would be if you don't get continuation and you start getting give back from the Friday move and start getting below, I don't know, let's just say around halfback, which is 28.80. You start getting below 28.80. That's not the way a rotation up normally behaves. So I would start questioning the quality. I mean, that together with the P shape that we saw on Friday will get me questioning the strength of the market. Uh, so yeah, that's where we are at the moment. The key events for this week is definitely the Jackson Hole Symposium at the end of the week, and we also have FOMC minutes on Wednesday. But let's just take one step back. The market has been driven recently by two main things: the uncertainty on what the Fed will do with the rates, and how the trade talks with China are going to develop. Now, the rally we saw at the beginning of last week was on positive news, but then it was reversed by recession fears. The reason that the market is not going all the way up with the trade news is that the news are not like do not have substance. It's just like, yes, we will discuss, yes, we will try to reach an agreement and whatever, but that's just an if, and that's just like an intention, and that can change from one second to the other. The market will react strongly or more strongly and in a sustained way if either part commit to something, because when China says we will do this and the United States says we will not impose tariffs, we will agree on this or whatever, the market will take that more seriously because there is less chance that they will change back because they will lose credibility and they're in a negotiation, they will lose stance and all of that. So if either part commits to something positive for the trade development, definitely the market should get an impulse to the upside. However, if they continue saying, well, we will talk, then we will not talk, then we'll see, I think the market will kind of remain in this balance. The Fed, we also saw on the news that Powell have indicated that none of the bank governors will make any statements in the short term. So I think that what the Fed is playing there is that they're waiting for some economic data to come out so they can have a better picture, and they also waiting for the trade talks to develop too, so they know a little bit better what to expect. So that is aligned with what we're seeing, the market balancing in a 2-week range, and probably that chop and that balancing will continue. The immediate focus is let's see if this attempt to rotate back, which in the daily chart looks strong to the upside, let's see if that continues. However, we know out of the profile that P shape is not the way. I mean, it would have been better to have an elongated profile trending the whole day. Even if the extension is about the same, it would have been better to see back and forth, and a trend up rather than a push and stagnation. Nonetheless, we monitor. Our focus is on value development relative to this upper distribution. If we get acceptance and continuation, that's good. Pay attention though, if we get a fail above this, or if we start giving back below halfback of Friday, because that could be an indication that this was just a bounce, a covering bounce, and we may be heading down. Remember, there's no excess on Thursday's low, and Thursdays and the previous two lows are pretty close.